Okay, so a post-bell review of the Ftse, a guard post-bell review. What's the time? 1:45 before the US bell. I'm going to try and nail this very short and in one take because I haven't got the time to redo it. So if I make any mistakes, forgive me. So very quickly. So if we look at the 1 hour chart, remaining our resistance channel. I preach about this all the time. 1 hour chart's important. If you look at the bull run here, the 1 hour channel, when the 200 is pointing up and the 50 is above, that gives you your a good idea of your trend, along with the 15 min for intraday, 1, 5 and 15 min for intraday. However, this is strong. 50, nice gap between the downturn 200 and obviously the down pointing 50. So this morning on the bell, I was fully aware that the 50 may hold and could provide me with resistance. If it didn't and we went deeper, then it would have been the same as yesterday. Go up a frame and look at your marks. The 100 here, splitting the resistance zone, and then the 200 as a deep test of resistance. That didn't happen. The 50 held this morning. So we've rejected the 50 MA on the 1 hour, and then broken the daily support. The daily support is here. So we've broken through. It held yesterday briefly and overnight, but we've broken through it with lots of price pressure. So let's just quickly look at how it did that. So we've got the 1 minute chart. Here is pre-bell testing. Remember the 1 hour, 50 MA here. So it's tested it and rejected it. Broken through this very weak MA support here. When I say MA support, 50 above the 200, price above. It's broken through and fanned out. Okay, so I've hit the board 3 times there, and there. TP'd back down here. So I've had 3 shorts trading the channel, which was also confirmed by the 5 minute channel too. So I played the 1 minute channel off of the mid frame fluid resistance, which was the 50 MA on the 1 hour chart. Now the reason I kept hitting the channel is because the gap between the 50 and the 200 is important. The bigger the gap, the stronger the res, but also I look at the oscillators. So we're getting lower lows on price and then lower lows on oscillators, which means that you have what's called continuation momentum until price starts to put the brakes on. And you know when the price is starting to put the brakes on, because on the low frames, starting with the 1s, then up to the 5s, 15s, blah blah blah, but it all starts with the 1s. It starts to put the brakes on when you start seeing divergence. We haven't got lower lows anymore. We've got lower lows on price here, retest. However, higher lows on the oscillators. So that tells me it's putting the brakes on. So I went long here, which is a 1, 2, 3. That's a 3-tier divergence retest of the low. And I TP'd off of the 200 MA on the 1 min, which coincides with the 50 on the 5 min. Okay, so higher frame, stronger MA support and res. So I took a long, I traded the channel down and then took a long on the oscillation, slow down, divergence, back to the fluid resistance level on the intraday downtrend. So it's important to know, I just wanted to make the point that you can go long and short no matter what, as long as you know your TPs. And I've said it many times, the TPs are as important as your entries, because you can get your entry bang on, but if you haven't got the expectation correct for a trade, then it can all go pear-shaped, because I know full well that until I get across here and the price is supported like this, the price is supported and has low frame MA support for more upside, it needs to, because it's all time frame relative, it needs to support the price on the 1s. I call that rolling over the 1s, to then move and start to attack and roll over the 5s. And the 1s haven't done that yet, not properly. So it was always going to be weak. So if you take longs from a scalping day trading point of view, have realistic TPs back to your fluid resistance areas until you get 1 minute confirmation holding support. That can then test the price. 50 MA on the 5 min starts to flatten, price might break it, 5s might start to support the price, back into the 15 mins, which is massive resistance right now, because the 5s would have to support the price and attack the 15s until they flatten, to then support the price to attack the 1 hour. Okay, so that's how you start to work out from an MA point of view what your fluid support and resistance is, and how strong the MAs have or don't have the price in terms of upside as low frame support, or downside as low to mid frame resistance. So at the moment we've got the resistance zone. So very, very quickly, let's look at where we are. I've looked at the weekly. We've broken through the 50 MA on the weekly. I've got no MAs below on the weekly. So I'm now looking at potential bottoms. It's a tricky one. I mean, where we are now, around the 280 area, historically, if you look here, in here, these highs and lows here, if you look, this is without question a gap. May provide a support zone, but very well may not. But you know, fundamentally I don't really care, because the low frames will tell me how the price is responding to any gap or any zone or any support and resistance area. So for me, what I'm doing is looking at the low frame action now, since we've had such a drop and a rejection from the 1 hour res, and I'll be looking for divergent zones. So if we get a retest here of the low, or even a lower low, what that would actually do is, if you look at the 5-min chart, if that comes down and retests the low or looks at a lower low, it would put us into a 5-min divergent zone. If I had 1-min divergences within a 5-min zone, I might take longs with TP back to the low frame resistance until I started seeing the price being supported, and then I might, you know, start to think of holding for tests of higher frames. Maybe back, obviously it's all time relative, as time goes on, maybe back for another retest of the 50 MA on the hour. My point being is there's opportunities both ways. If your TPs are realistic and you're aware of the intraday support and resistance zones, because trust me, price bounces off of them all the time. Yeah, divergence on a low frame, back into the next frames up, the next frame up, fluid resistance area. Okay, so TPs are important either way, whichever direction you're trading.